Okay, let's go here. Facebook first, Netflix a second, and actually we're going to go off the beaten path a little bit. Actually, kind of like Snapchat and Spotify. But of the FANG names, we go Facebook, Netflix, Amazon, and Google. So what you want to see is, can these companies, all of them pretty much had revenue growth decelerations in the March quarter. Are there reasons why those growth rates will stabilize and improve in the back half of the year? Facebook, we think, has got easing comps. They're starting to roll out more monetization of things like the Explorer tab on Instagram. We're also starting to see better monetization of Instagram and Facebook stories. And we think we're through most of the negative heat when it comes to regulatory issues. Switch over to Netflix. We think they have a successful price increase going on and an extremely strong content slate coming in the back half of the year. We are 3 days away, I think, from Stranger Things 3, Season 3, and there's a slew of other programs. So with that, we think we'll see revenue growth acceleration, margin expansion. Amazon, what we're waiting to see is whether the Prime one-day, the switch to one-day guaranteed delivery, whether that has a positive impact on consumer spend with Amazon. We think it probably will. I don't know how long that'll take to play out there. Finally, there's Google, most regulatory overhang of all of these stocks, and then this revenue mishap in the March quarter. And the question is whether it's going to, how many quarters it's going to take them to correct that. That's an unknown for us. But anyway, that's the order. We'll go FNAG.
FNAG.
Yeah. Yes.
You know, Mark, for Netflix, I was wondering, you know, I read last week on believe Friday that Nielsen released its super data in terms of how much in revenue Fortnite made in the month of May, and it was down 38% year on year. And I know that was something that Reed Hastings actually mentioned specifically on a conference call, that the competition for eyeballs exists everywhere, including Fortnite. Is that a good sign? Is that too small of an impact for you?
I don't know, Melissa. It's a good point. Reed is right, but he's also a little bit tongue-in-cheek. I mean, I guess in that case, Netflix competes with anything that takes our eyes away from the screen, whatever screen that is. I think the big pitch behind Netflix is this content slate is super strong. This company's got $15 billion in spend that's coming out. They're swamping the amount of spend that any other new OTT offering is going to come out with. So that's why I think there's an overhang on the stock related to the Disney launches, but I think they're going to power through it because of that content slate. We're seeing more and more traction in more and more international markets now, particularly in Western Europe. We're still waiting to see how successful they can possibly be in markets like India. That's really where the story on Netflix is. This is all international now. 85% of the sub growth comes from outside the US.
45 seconds. Give us your reasoning behind downgrading Roku, I assume, because it had hit your price target and it's where you like it.
We downgraded 3 stocks this morning: Trade Desk, Roku, and Lending Tree, the 3 fastest, best performing stocks in the mid-small cap space year to date. They'd hit our price targets. They'd reached intrinsically high, robust multiples and peak multiples in the case of Roku. If you got that, you better have revenue growth acceleration in the back half of the year to re-rate it more. We don't think we'll see that, so we step to the sidelines. They're good assets. We'd prefer to buy them lower.